Hey traders, welcome to the Monday market breakdown. It's also the start of the month, so we updated our watch list, added a couple of things which we'll see down at the bottom, and probably takes a couple of things away this afternoon. But generally speaking, the bearish picture still remains. There's no real clear areas for us to get long at any of these equities at any point. We're really defensive at the moment, and our defensive strategy remains kind of the center point of our equity stance. When we go into the S&P mini futures, structure-wise, there's not much to speak of. All we know is, like I said before, we're sitting right at the top of, or near the highs of, a lower degree structure and a higher degree structure. When we zoom all the way out to, say, the weekly, you can see how we're sitting right at the top at 1.618. I always said that 4,000 level is going to be key, and I'm not even sure we're going to get there, to be honest with you, but perhaps we're still going to get there. Perhaps we're just playing out as a little bit of a structure in here. As you can see, daily-wise, no crossovers whatsoever. So everything in here is lower time frame. And when we go into the lower time frames, all we really have is 1, 2 little crossovers, but there's no ways we can consider this a B wave. So potentially an A, B, C, D, E, and we rally from here back up to that 4,000 level. But even then, I don't like the structure, to be honest with you. It's just really messy at the moment. If we had to look at that all as one big thing, one big structure, A, B, C, D, E, where we're sitting now, maybe we get legs and a blow off top towards the 4,300 region. But with an expanding triangle in this area, you can just see if it is an expanding triangle, because there's no certainty that it is. But if it is, you can see just how much uncertainty in the market there is. It's not something I really want to play in right now. I think there's far better opportunities in things like the FX market rather than equities. And I'd really rather focus on individual equities if I am looking to trade within there. NASDAQ, strong pullback off the highs, which we spoke about. We did speak about getting very defensive. We're down 7.8% off the highs. No real indication of where we're headed from here, to be honest with you. We need time to allow these markets to develop. As you can see, if we go all the way down to the hourly, you can just see all we have is pretty much a straight line down, no crossovers back to the highs. So we need to wait for structure to develop within these lower time frames to really get a clear understanding of where we'll be headed next. Right now, there's no clear picture. And if you had to really just take a look at it, all I'm really seeing is a potential head and shoulders top as it stands, just a classical charting point of view. But like I said, there's no real clarity as to what we're looking at right now. So patience is kind of the name of the game, and being very defensive within that patience. The Dow Jones, same thing really, top of a structure, starting to pull back, no real clear understanding of the actual structure, but you can just see really two big, strong bearish candles there, which says a lot about where we're sitting right now. We're sitting a good 3% off the highs and no real indication of where we're headed next. So we really just need to be patient. Same thing with the Russell. We zoom in on the Russell. Again, everything's very choppy. All these little expanding, potentially, let's call it expanding triangle type structures where we have a big impulse, up, down. Potentially what we're looking at again is a little bit of an expanding triangle. So push off the highs, A, B, C, D, E, and now maybe another leg lower from there. That's my best guess on all the indices, is this Russell with an expanding triangle. So that to me is worth the trade considering where we're sitting. Let's just put an entry order below those lows, and let's zoom out to see where we're sitting on the higher time frame structure. You can see we're way at the top. So there's plenty of room to a little bit of correction in here. So there's plenty of room to profit off of a little bit of weakness in the Russell. I think a lot of the market is a bit wary at the moment. Rising yields, which have kind of pulled back, but there's a lot of caution at the moment. A lot of I think the narrative's been shook just a little bit. So people are very wary about where to from here. And if that is the case, and there's a bit of fear in these markets, the Russell is definitely going to be one that sells off. So that's worth taking a risk in my view, maybe a lower risk position, given we don't have a complete structure, complete understanding of the structure. But I think a lower risk position in this region could really pay off handsomely in the long run. So sit with it, see if you can hold it out. Facebook kind of continues to maintain its structure that we were looking at. Still has a little bit of a triangle look to it, but some of the other pairs like Apple and Amazon kind of negate that triangle correction to the upside. but it is something we need to be cautious about. What I'm looking at here is an impulse down, an ABC, and now we're moving to the downside. It's a really slow start, really painful trading, but I think at some point this is really going to start getting some legs fairly soon. If we go into lower time frames, you can see we've had a bit of a 1, 2, 3 up. Looks like we're chopping down, maybe get one more up, and then this little corrective structure does actually look like it's going to play out kind of how we were looking for it to. We just need to be patient and looking for an entry in this trade, because I still think we need to have another leg higher if that is the case. Apple still looks like it wants to sell off a little bit more. It's done enough in terms of length of structure. If we look at the actual correction itself, you can see how the C wave is more than likely in terms of length of correction. It's done enough. So we'll have an A wave down, a B wave, and a C wave that's gone towards 0.618. Still a little bit left in the tank, but it has done enough in terms of downside. I worry a little bit about rising yields. When we take a look at something like TLT, the 10-year bond, you can see how that has potential to really move the market. If we go, let's just take a look at it over here. Take a look at TLT 4 hour. You can see how structure-wise and the bounce we've had shows a potential move back up to 160, 165. And if that is the case, you could potentially see these tech stocks really starting to rally once again, which is a little bit of a concern. Pre-market, we're down a little bit, down below Friday's close, which is interesting. But structure-wise, we are sitting in a region where we could start to rally. So just need to be cautious of that. But going back to Apple, you can see how there's still some downside to come potentially. In my point of view and how I've been calling this market, I think there's way more downside to come on this. So that's just, obviously, that's just me speculating. Chart-wise, there's still a little bit of downside to come down to 105 to give us the full ABC running flat structure. I believe it's going to turn into an expanding flat, but running flat-wise, we still have a little bit to go, but we have done enough and we can turn to the upside from here. So just keep that in mind in your trades. I'm definitely not looking for any longs. If that is the case, I'm looking for patience. And if we do get an up and a little bit of a flag, then I'll only look for a long. But right now, there's nothing there for me. Same with Amazon. Amazon still looks to me like it wants to go break these lows at 2550 or 2950, somewhere there, and probably go test these lows at 2870. That to me is the price action that we've been looking for, and it's been playing out pretty well in our favor. From there, we could get a rally, which we could see that same rally in Apple. But right now, I still see downside. Microsoft, I'm looking for this little corrective structure, which we've been speaking about. We've had the push off the highs, which we were looking for. Now we wait for something corrective, in which case we can trade to the downside. Netflix, we were looking for something corrective, and it looks like we're getting it a little bit, but the problem is the structure of the waves. It looks a little bit to me like this is actually forming a little bit of a triangle. A, B, C, maybe go test the lows, D, one more push up, E, and then get some downside from there. Impulse, A, B, C, D, E, and then I'll look for that downside. To me, it looks like this market's going to start the week slowly, maybe chop down, pop up, and then we get the legs we're looking for. We'll get the price action we're looking for. Google also looks like it may have topped out. A little bit of a lower degree head and shoulders here. Structure-wise, higher time frames, very unclear. We just know we've come a long way and we're in for correction. We still have this big gap, so I'm more inclined to look for those short trades. If we look at the structure itself, more than happy to say that's a little bit of an impulse, and what we're seeing here is the first little bit of corrective structure. And if that does play out, then I'll be looking for those shorts. I'm still pretty bearish tech the way we're looking at it now. Same with AMD. We were looking at AMD to become a little bit of a running, expanding triangle, and potentially that's what we're seeing now. A, B, C, D, pop higher, E. And the downside is still definitely on the cards, if you ask me. So you just need to be patient and wait for entry. If you're not in this trade already, I think entry below these lows is definitely a viable option. And worth the look. I said we're going to move down to here, but I think there's more to this move than that. I think we're going to see more than just an average little running flat for more upside. I think this is going to turn strongly to the downside, and eventually you're going to see this play out as a big head and shoulders pattern. When you look out to the weekly, you can just see just how extended we are. We really need to see a little bit more of a deeper pullback from my point of view. So that to me is definitely worth a look. BA, these airlines, it's really challenging at the moment. Higher time frames, just no real clarity as to what we're looking at. ABC, maybe zigzag, maybe we've pushed off the highs, and maybe we're starting to see a longer drawn out lower degree corrective structure, which we can trade to the downside, but that's going to take some time to trade. Big bearish engulfing candles here. That looks pretty bearish to me. We've had a 1, 2, 3 structure to the upside. I think we might get some more downside from here. Maybe it's a zigzag and we get some legs to the downside. Maybe we just chop around. Trading wise, very, very difficult. If you want to trade that as a little bit of a structure, trade the break and move to break even fairly quickly. That may pay out, but it is pretty high risk. Like I said, we may just go and break these lows at 191 and then rally once again and get a little bit of an ABC structure. But that will have to get pretty choppy in the middle to give us that B wave price action that we look for. So we'll have to just see how it plays out. That's just an option. Like I said, maybe it's a zigzag and we just break through as we speak. So we'll have to wait and see though. Alibaba didn't quite get the price action we were looking for, although we did say it is quite cautious from the broader market. Initially, we were looking for a lower degree, little running flat. Expanding flat is starting to lose its glee at the moment. It's looking a little bit too much expanded, especially the price action we're looking for. I'm more inclined to think more downside here. Maybe we're going to have to start to look at this higher time frame structure as a little bit of a triangle. A, B, C, D, E, pop higher. Now we're heading down from here. I would really like to see this start to develop into something more corrective. And then we can really start to look for that downside trade. That would really be interesting to me. But patient-wise, let's just see how it goes, see how things develop. Again, no real trading in there for me. Bank of America, really interesting price action in terms of candles. Two big bearish engulfing candles after breaking that high, which we were speaking about. We're saying, watch for a break of that high, watch for a turnaround. And that's exactly what we've seen lately. So we'll be keeping a close eye on this one to look for an entry, because the downside target on this one is probably back down to these lows at $2, somewhere around there. So it's a very big downside move potentially. So I'll be keeping a close eye on this to see how things develop. Basically, we're looking for that same little structure that we like. Impulse, something corrective. If we get a little bit of a flag in this region over the next few days, that'll be something worth trading. But for now, I'm waiting for something more corrective. Berkshire Hathaway, another two big bearish engulfing candles right at the top of the structure. So again, very interesting price action. Pretty bearish in my view. Really at the top of these structures, and this market's just looking really heavy in my view. So again, just looking for those corrective structures, seeing how things develop, looking for a small corrective move, and then trading that to the downside. Beyond Meat, short trade playing out really nicely, should continue to play out. Downside target back to these lows at 49, 49.50, somewhere there. You can see how strongly we've pushed down from those highs. So it's looking really good. In for a little bit of a corrective structure, a little bit of a corrective move. So you might have to be a little bit cautious. As you can see, impulse, correction, impulse. We're touching near those regions. We can maybe get down to 123. I wouldn't put too much emphasis on that. We may just see straight lines down because this is quite a choppy move in the beginning here. So we might just see this go all the way down to 50 without much of a break. Citigroup, kind of double topping at an interesting level. I would have liked a little bit more out of it. I would have liked to have seen those highs broken. But in terms of this lower structure, you can see how impulse, correction, impulse, we've crossed the 0.786. We're taking a little bit of a double top price action at that region. I suspect there's more downside to come. Regardless of whether it's downside or not, I really don't see any upside unless this develops into a nice long drawn out triangle, in which case I'll look for the long then. But right now there's nothing. I'm more inclined to look for a flag or structure to trade to the downside. Camco, kind of struggling to get legs. I still believe downside. We did trade this as a bit of a hedge against my bearish narrative, and it's just struggled to get some legs ever since. I still think taking profits on that trade is a good call, and maybe just putting an entry order above the high if you really still believe it is going to get any further upside. Structure-wise, you can see how we've had this push-up impulse. This is the daily structure, push-up impulse, going to what looks like an expanding triangle, another impulse. We've crossed the 1-to-1, so there's really no calls to be long from that region. If you really believe that there's more upside, it is really risky from my point of view. So I'm more inclined to be bearish and at least defensive. Chipotle breaking out of our little ascending wedge that we were marking for some time now. It's not the ideal wedge. It just has this kind of, as you can see, the MACD divergence ascending look to it. That means to me like it's ready to break to the downside. Obviously, there's the potential that all of this is a running flat, in which case we'd have to really take note of potential upside. But when you look at the higher time frame structure, I just don't see it. I just don't see a place where we really rally strongly from here. But it is something we're keeping an eye on, or we will have to keep an eye on. If it is going to take off, length of correction wise, this is way too short to be correcting this impulse. Well, actually, it's not. We're good to go. So if we are looking for upside, funny enough, the upside is strong. But like I said, it just doesn't make sense that we're going to see Chipotle rally basically double from where it is now up to $2,352 a share. So I remain bearish, but if you are going to look for long positions, if this starts to get some momentum to the upside, Chipotle is one that's worth buying. DraftKings pulling back from that high, kind of chopping around up pre-market, maybe go test the highs once again. It's kind of got that same little running, expanding triangle look to it. If you take a look, we'll get out of candle and look at the line chart. It's got that look to it, like it wants to go lower. Impulse A, B, C, D, E, and you want to go lower. You can see the highs of the expanding triangle are broken. But again, this market's so choppy, so messy. It's really hard to find really good conviction trades at the moment. So that's why I'm saying be patient with the trades. Wait for the structures that say, cool, this is definitely going down, and we trade that. Running expanding triangles are some of the most complex trades on the cards and really, really confusing. So really difficult to trade, and definitely, in my view, not worth really putting the time in to see if it's going to play out or not. I'd rather go find better trades. There's a lot of risk trading things like that. So I'd rather look for higher conviction trades. EA definitely getting some downside. We've always been bearish this. We've been bearish for ages now. We're just struggling to find that downside that we were looking for. We broke the highs again. Look at this weekly candle. You can see how bearish that candle is. So I'm still looking for shorts. I still think this entry order below the lows is worth taking because this downside is still really good. Down towards 70, 80 is my downside target. I still think the structure looks really good. And this is one of my cleaner charts, one of my cleaner trades on the cards at the moment. Ford is another one. I remain bearish. I still think we're going to see that downside. You can see how extended we are. And we've got this little bit of ascending wedge on the lower time frames, nice and clean. MACD divergence, everything you would want. So I think a break out of here is definitely worth looking at for a short trade. FireEye, we were looking at this to develop into something more complex. Since then, I've decided I think what we're looking at here is actually more a contracting flat. I went into the line chart. You can see A, nice chop down, B, chop up, C. That's enough to be considered a expanding or a contracting flat. We did get enough out of it. I'll show you the numbers. So we went up to touch the 0.786 really, and we fall down from there. So I think this is going to continue to the downside. When we zoom out, you can see structure-wise, I think this is all just a B, C expanding triangle, corrective move, and we're going to go test the lows once again. That's what I'm seeing in these charts, and this downside is kind of confirming it right now. So this is another trade that's worth looking at if you can find a structure, although you should be in it already, given this move should have an entry order below these lows. So maybe even getting in now with the stop above these highs may pay off. You just need to be cautious that what we're seeing is actually an impulse ABC, and the impulse to the downside loses momentum here and turns to the upside, and it's actually more corrective. And we've got the broad analysis wrong, but I don't think so. I still see downside. I don't see how things like FireEye are going to rally when the rest of the market's looking so bearish. Case in point being GDX. This is textbook about how classic charting and our form of charting, our structural analysis, come into play, because we have this really big head and shoulders, a really clean corrective structure breaking through the neckline. But then you look at the actual structure where you have a big impulse off the highs, you have a wave to the upside, you have a 1, 2, 3 to the downside with an expanding triangle in the middle. Expect a retest of the neckline at some point. That's going to be your ABC running flat within there. So that's how the retest of the neckline and our ABC correlate. And then we can see from there how the downside target is new lows. So a really big move potentially in gold to the downside. We're still short gold, holding that short, looking really good from my point of view. Goldman Sachs, 2 nice big bearish engulfing candles, but no real confirmation from there right now. Higher time frame still as bearish as ever. As you can see, structure wise, we should go and test $100, which is a very, very big drop. So waiting patiently to see how this plays out, waiting for corrective structure. This is the type of move we were looking for, where we could trade as a flag trade, where you get a couple of more candles moving sideways in this region, and you can see how hourly that's forming a little bit of a little bit of a flag, and then you trade that when it breaks. When you get a first clean break of that, a candle closure below that, and a nice bearish candle, you get in, you trade that to the downside. That could really pay off in a big way. Otherwise, you have to wait for a higher degree corrective structure. Bio shares, just to show you higher time frame, A, B, C to the downside, expecting continued downside momentum. When we remove the candles, this is the weekly chart, keeping in mind, you can see how bearish those 2 big candles are on the weekly. Going down to the daily, we're still waiting for the correction we want to trade, because at the moment, all we're getting is flat, straight downside. Let's go into the hourly and see if there's anything in there that was tradable. It's really choppy, really messy, really hard to trade. But you can see how trading one of these, they're not really flags, but you can see how that downside has really just taken over. So something to think about in Goldman Sachs, maybe a lower risk position next time you see something along those lines. You can see this little zigzag formation. But generally speaking, I'd like to see a little bit of a corrective structure that is more tradable than that, and looking for those shorts. There's lots of downside to come, plenty of downside if my analysis is correct. IBM still chopping around, still making a mess of itself. No real indication of where to next. Lower degree time frame says impulse A, B, C, D, 1, 2, 3 down, E, and then more upside. Higher time frame, very bearish, and kind of leaning towards downside in reality. So yeah, conflicting price angle or price action on different time frames, but this could be a good hedge to trade along with all these shorts that we have on the cards. Don't really see anything that's worth trading to the downside here, unless you want to trade that in a lower degree risk position and move it to break even fairly early on, because maybe we're wrong about the higher time frame, or the lower time frame and the higher time frame is correct, and we're just going to see downside from here, especially with a bearish looking market. Intel looks very bearish for me. As you can see, what I'm seeing here is really nice impulse off the highs, really clean ABC corrective structure, and we should start to see some downside momentum here. Obviously, we could just chop a little bit higher, but structure-wise, there's a very clean ABC after an impulse, which to me states at the very least to go break these lows at 43. When we zoom out, you can see this little topping pattern, head and shoulders type structure, and to me that says even more downside. And the higher time frame structure, as you can see, is saying probably under $10 a share on Intel moving forward. So really interesting looking price action, and definitely a trade I would want to take to the downside given the risk reward available to us. Johnson & Johnson giving us a little bit of a corrective structure we were looking for. Not too bad in terms of structure. B-Wave's taking us in long at least. I would have liked a little bit more choppiness, but it is taking us in long. If I can get a little bit of a push higher here, then I'm willing to look at that as a nice little ABC lower time frame structure and take that short to the downside. Higher time frame, we're trading off the top of the structure. You can see how bearish that candle is, that wick, and we're starting to see some downside momentum. So again, a lot of bearish confluence factors at this high, the way I'm looking for short trades. You can see our pre-market, we've popped higher. So I think already we're getting that C wave we're looking for, and we can start to wait for that downside momentum to trade to the downside. JP Morgan Chase, two big candles, zoomed all the way out. You can see how on the daily we have a big move down to come, or potentially looks like a big move down to come. Again, all I'm looking for is something more corrective on the lower time frame. So we've had a little push. Now, again, you can trade potentially these little flags, these little zigzags on the lowest time frames. They are little structures. We have downside potential, but keep it low risk because you never know. This could potentially be a running flat for upside. You have to be cautious of that. But I'm maintaining that bearish outlook, and I'm looking for opportunities to get in. The safer thing to do is wait for kind of lower degree corrective structures to trade to the downside. But again, that could only occur way down here, like we saw in some of those other pairs. So just be cautious. If you are taking flags, try to move your risk off the table as soon as possible, get to break even as soon as possible, and keep those positions really low risk. They are pretty much gamble moves because you don't know the structure at the moment. Same with Live Nation. Higher time frame wise, you can see one down, 1, 2, 3 up. We're in a position where it looks to me like we're going to turn to the downside, and in a big way, big slow chop down towards probably around about 24, 28, somewhere in this region. Lower time frame, we're still chopping around at the highs, a little bit of a head and shoulders type structure in here, potentially worth trading. The break of that, because if we're going to get downside momentum from here, it should be quite a big move to the downside. Either way, if you're not doing that, you're going to wait for these this lower degree corrective structure to trade to the downside. 3M, as you can see, nice impulse off the highs, push up, impulse down, 1, 2, 3, 4, 5. I think that would be considered a little bit of an expanding triangle. So now we're expecting a continuation to the downside, which we've gotten. This is the one we were looking for here. Next move to come should be a nice little push up. Probably break these lows first, get that push up, and then we can start to look for those short trades. That to me is a nice little structure. Impulse, A, B, C, impulse. That's what I mean when I say we're waiting for these little corrective structures to trade to the downside. 3M showing us a really nice one. The higher time frame, not great. They're not clean and clear, but it does have some structure. Impulse, ABC running flat, impulse up. If you look at the log chart, you can see how we didn't get enough out of it, but we're still getting that pullback from the highs. So you have to be kind of cautious with this one. Sad that we're getting all these very clean corrective structures on the lower time frames, only on the pairs where the higher time frames aren't very clear. So that's the kind of market we're in at the moment. Kind of painful. Morgan Stanley, same as all the other banks, big impulse off the highs. We're looking for a turn. When we zoom all the way out, downside structure shares or shows really big downside to come. So again, just looking for that push, looking for that correction. MicroStrategy. We said you could take this as a trade, given how bearish we were Bitcoin, and this little structure turned out pretty big. I mean, we saw a 30% drop from there. I still think that drop's going to continue. I'm still bearish Bitcoin, and when you look at the structure, you can see, and you look at that candle on the monthly, you can just see the bearishness that we have in line for this move to start getting some legs to the downside. Really, really messy chart though. So yeah, I still see downside on MicroStrategy, especially relating to Bitcoin. We are getting a little bit of a corrective move in here. So let's see how this develops. Maybe we can get a short trade out of it. We need to be here for a little bit longer. Nvidia, our little short trade we were looking for, playing out really nicely. ABC to the downside, maybe, potentially, and what I think is going to happen is this is going to turn out like Apple, and it's going to be more of an expanding rather than just a regular running flat. But at the same time, we will be keeping our mind open and we'll be looking for a turn to the market. Then we'll know we have a nice long drawn out running flat, which we can trade to the upside if we do see a turn. But right now, I'm still keen on those shorts. As you saw, we had a nice little topping structure there, big impulse down. So I still see more downside to come if you can find a good entry. Pfizer, keep in mind we were looking at this as either a triangle or a flat pattern. Still got the flat pattern in mind, just because of where we're sitting. You're only going to be able to distinguish that this isn't a flat pattern at the lows, which is painful. So the moment we're just trading these little flags like we saw, and expecting a turn to the upside. If it comes, that'll be a really good trade, nice long trade, but you'll still want to be patient with it. But for now, continue to trade any little flags to the downside. Keep in mind, we've moved a long way from the highs without much of a correction. So really risky trading in here. I prefer to be patient and see how things develop. I'd rather be short something like Ross Stores. When you look at it, two big bearish engulfing candles off these highs, you can just see how this price action is looking really bearish. Problem with this is there's also the potential that this is a little bit of an expanding flat. Impulse ABC, impulse to the upside is a potential. So just be cautious. Again, lower time frame in confliction with higher time frame. When we zoom out to the daily, you can see how we're expecting downside. When you zoom into the hourly, you can see how it's looking more like upside. So really challenging conditions. We just have to play it how we see it, wait for the opportunities, and then keep the risk nice and low. Spirit, I actually want to take Spirit off the watch list. When we look at it structure-wise, the only thing I can see this as is an ABC expanding or a zigzag structure. Impulse, ABC, impulse. We're at the highs of the structure. That all makes sense. The rest of it makes no sense to me. So you have to call this B wave, A, B, C, D, E, triangle, impulse, B wave, impulse, A, B, C, turn to the downside from there. So if you are looking for shorts, this is a good short, but the structure is just not so clean. Because structure-wise, if this is correct, we're going to go test these lows once again, which is a really, really big move and definitely worth the trade. But when you look at the structure, it's just an absolute mess. That being said, this is the kind of flag I was saying that's worth trading. So a break of this to the downside, that to me is worth trading. So maybe we keep Spirit Airlines on the watch list after all. You can see how far we've come on the hourly. We do a decent correction. We've had a nice impulse. We've gone into a little bit of a flag. At the very least, we should get something like that, breaking to the downside. Better than that, maybe we get some legs and this market starts to look heavy and we really get legs down from here. So I think that's worth taking. Starbucks, our little long trade, which we mentioned, a little bit of a counter trend long, A, B, C, D, E, has definitely played out really nicely. Nice push of the lows, went into a bit of a zigzag correction. That was your trade to the upside, and we have good extension from there. But again, we're sitting right at the highs of a bigger structure. Really, really messy, really, really cautious of this pair. You can see the MACD divergence on the daily. Momentum's dying down. We've had a 1, 2, 3 up. We've got all the structure we need for downside. So just patiently waiting to see how things develop. If we're going to go test 120 first, definitely a possibility, but we've already done enough in this lower structure to start to turn to the downside. Or we haven't quite. We want to get up to 113. But yeah, again, we're trading right at the top of the structure, so you have to be really cautious up here. Twitter is one I really want to take off the watch list because how frustrating it's been. Structure-wise, we're right at the top. Impulse, ABC, pushed up, we extended up to 2.414. Zoomed out to the higher structure, you can see push up ABC, we extended up to 1.618. So to me, we're at a point where we should see downside. We should see a turn here and a move down at some point, probably down to these lows, to be honest with you, but that's not very clear. Like I said, very unclear markets. Daily or hourly, no real momentum just yet, potentially still more upside, just really frustrating. I want to keep it on the watch list because I see that downside coming. I see us being oversold or overbought at these regions. I'm seeing MACD divergence on a lot of these time frames, on the lower time frames at least, from extended levels. To me, when you can find a good short in that region with these big gaps down below, that's a short worth taking. Visa just struggling to break through this 220 region and higher time frame. Once again, like I said, I maintain we still have this bearish outlook, just struggling to get any legs to the downside. Every time it looks like we've turned, we rally to go test these highs once again. But like I said, we're just struggling to break through this 220. So this downside momentum from that region could be a sign that we've turned and we can start looking for short trades. This is also giving us a pretty decent flag. So that to me is a good trade. Verizon, I'm actually going to take Verizon off the charts just because of how messy it is. I think we're going to move down to 2250, but when you look at this in here, this is just an absolute mess. So I'm going to give this some time to clear itself out, a couple of months, and we'll put it back in. ExxonMobil, this is an interesting chart because we did say, wait till we get to the highs. That's going to be an interesting level. What happened at the highs? Big gap down. Not a big gap, but a gap down. We're now chopping up to close that gap. I think an inch order below these lows with oil pulling back from where it is a turning point for energy. And we're going to start to see further downside. Again, I'm just seeing shorts all over the place. I'm really struggling to find longs. And like I said, I'm really bearish. At the very least, I'm very defensive right now. Zoom, this played out to the T. Love this trade. It was perfect. Impulse to the downside, ABC, all the structure we wanted. We had a 1, 2, 3 up. We said, watch for a break of this trend line to the downside. We've got a lovely little flag down there. And from that flag, we've just broken lower. From there, it looks like we've developed this little move into a lower degree corrective structure. This little push higher is now just the C wave of a lower degree ABC. You'd probably have to go into the 15 minutes to see it. As you can see, a little bit of an ABC. Now we can start to look for re-entry. If you're not in already, you can start to look for those shorts because this is a really clean chart. And I think the downside on this has some legs. I think at the very least 193 to the downside. And we're sitting at 384. So no need to talk about how big that move is. Adding to the list, we added Expedia just because the structure looks really good for downside once again. We've broken some really key highs at extended levels. It looks to me like an A, B, C, D. At the very least, we should get some downside momentum to at least break this or close this gap as an E wave. When we zoom into the lower time frames, structure-wise, you can see choppy push off the lows, nice ABC running flat, and then we've pushed up towards 1.618. We've broken those highs, and we're hovering around those highs. So we can start to look for some downside momentum in this market. That's worth trading in my view, because downside, at the very least, I think we're going to go break this at $100, which, as you can see, down to $100 is a good 40% drop. So very, very good looking trade in my view, and worth keeping an eye on. And we added FedEx to the group. First of all, really nice slanted head and shoulders structure, which looks like it's going to be playing out for more downside. I think the shoulder is developing into a little bit of a running flat or ABC corrective structure, very much along the same lines as GDX, which we spoke about. So expect this to develop into an ABC. Trading wise, I think shorting this at some point is on the cards. If you find an entry that works for you, it's worth taking. You may want to just be patient with this though. My only worry, my only concern is, given the head and shoulders structure, is this choppy wave gets a lot of legs to the downside, and our C wave only starts taking shape all the way down here, which becomes a retest of the neckline, as you can see. So we may get some serious downside, but also potentially the right shoulder is just this ABC. It's more of a complex head and shoulders, which happens, and only then do we get the downside. So I'm going to play it by ear, see what you see. If you're going to take this early, just keep it low risk. If you're going to be patient and wait it out, you can go full risk once we see the structure play out. But this is something that's looking really interesting in my view for quite a bit of downside to come. Riot, if Bitcoin continues to drop, Riot is going to get hammered. When you look at the structure, it looks really good. We have a nice push off the highs, off the lows as an A wave, really nice structure in the B wave, big strong push up as a C wave, extended as well, pretty much a straight line up. Hard to get in here without losing out because the upside is limited in my view. We're so overcooked, we can really start to look for downside. We've had a bit of a push, potentially what we're seeing here, and definitely something worth trading is a bit of a running flat on the lower time frames. Why I like this trade is because we are now sitting at $47 a share. If we go out to the higher time frames, this is going to go back to the lows at 50 cents. That's a massive drop. So risk reward wise, this is beautiful. Bitcoin looking bearish, Riot looking bearish. Riot's going to get hammered if Bitcoin comes down, and this is definitely a trade you want to look at. Seagate is another one. We remain bearish. Just to zoom out to the higher time frames, you can see ABC. Look at the structure of this, really beautiful. A, nice 1, 2, 3, 4, 5 in the middle, push up, B wave. Now we want to see some downside momentum. So we're just waiting patiently. You can see how this is starting to die off already on the weekly. The daily, you can see we're losing momentum. So now we're just waiting patiently for something that looks like we can enter as a trade. I'm a little bit worried that this little wave to the downside becomes an ABC for a little bit more upside. So you may want to take this early, be aggressive with it, trade a break of this trend line, and then go move to break even fairly early on, kind of down when it gets to 66 in that region, because there is a chance that we turn to the upside for more upside on the lower time frames before we get that downside. But like I said, that higher time frame really is bearish. We're right at that area where we can expect a turn to the downside. So keep that in mind. AT&T, there's a trade as we speak. I think a little bit of a flag here is worth trading if you find it. You can see a nice little structure we have here. Definitely a little bearish structure, looking really good. A impulse down, ABC, impulse down, and when we zoom out to the higher time frame, we're still part of this impulse, ABC, impulse. So that's your first lower degree price pattern, and the downside target still looking really good to probably go down into lower single digits, somewhere around there, $18. Zoom out. You can see how that's very, very much on the cards. Probably go and test these lows if the structure is going to maintain its value as an A, B, C. All of this is the central B wave, which means we're chopping down to these lows at 21. Then we can look for a long. But that being said, down to 21 is a nice trade and definitely worth looking at, and may go even further down. Keep that in mind. It's cool, guys. That's it for today. As you can see, that bearish outlook really staying strong. I really am very, very bearish equities at the moment. Keeping a close eye on the dollar as to future direction and seeing how all of this is going to conjoin into a complete market picture. But yeah, like I said, I'm very, very bearish, and I think you should be very defensive at these levels. Cool, guys. We'll chat again on Thursday.